Welcome to Channel 17, the Town of Colonie Government Channel.
Hello and welcome to The Money Factor. I'm Richard Naylor, your host. Today we'll be talking about credit cards. Our guest is Laurie Gioeni from Consumer Credit Counseling Service. She brings experience working with people with problems and working through those problems. I want to welcome you to the show.
Thank you. I'm happy to be here.
What does Consumer Credit Counseling Service do?
Basically, our agency, we're a non-for-profit. We offer debt counseling, budget counseling. We offer pre-purchase counseling for people that are trying to purchase a home and don't really know where to begin. We offer foreclosure counseling for people that are getting in trouble with their mortgages, and we do reverse mortgage counseling as well. So we have a variety of different types that we offer.
So you probably adapt to the current climate to some extent.
Oh, definitely. With what's going on in today's economy.
Right.
Definitely, we're very busy.
And that's kind of why I thought, let's talk about credit cards today, because a lot of people say it's a big potential problem in our country, but there are all these complicated things we get from them. You know, we get our little mailers, and they say, okay, this is your new policy, and it's got a lot of fine print, and we see percents. How many people would really read all that?
Exactly, they don't read that. That's part of the problem. That's why a lot of people are in trouble today, because they just don't have the knowledge that they needed to have about the card and the interest rates and what can happen if they default.
So let's start with how should people use a credit card? What do we do with credit cards?
Well, basically, I mean, a credit card is really more for convenience sake for larger purchases. Sometimes there's special incentives that are offered, discounts, rebates if you're using a card. Ideally, in a perfect world, you would want to use your card and be able to pay it off in full every month. For most people, that's difficult to do, especially if that balance gets up there, but we encourage people to pay more than the minimum, obviously, because it is revolving credit designed to keep you in it forever. So if you're not able to meet more than the minimum payment, that debt will never go away.
And eventually, if that interest gets too high, you, just like a country that's got a huge debt, you spend all your money paying for treading water.
Yeah, because the majority of what you're paying is going on the interest and very little towards principal.
So, you know, I've seen things like 29%, which...
Yeah, that's not an uncommon rate today.
If you were getting a car loan and somebody said, oh, it's only 29%, you would pass out or just run.
Yeah, run would be the better way.
So what would happen if somebody paid today the minimum rate? I think in the past, but I don't know when that happened, they changed the rules a little bit so that they couldn't have such a low number. But what would happen today if somebody paid the minimum amount?
Well, again, the debt would just, you'd never really affect the principal in anything timely, so it would take a very long time to ever get rid of the bill. So.
And then if you use it again, it gets worse and worse.
Well, yeah.
Yeah. And eventually.
It grows at a faster pace, and you can address it. So.
Right. So if somebody their income is such that they feel that they need the credit card, it seems like it should be an occasional.
Exactly,
it should be a
more
habitual way to use it.
Exactly, it should be more of a convenience thing. And unfortunately, today with people losing their jobs and companies downsizing, people are typically using it for survival. I mean, they're gas, groceries, that type of thing, more so than just luxury items. It's just a necessity. They're surviving with them.
And it's probably easier to say you should pay it off every month than to try to sit down with all the bills and not know where your food's coming from and decide you'd rather not eat and pay off your credit card bill, because it's kind of important to...
Well, that's where part of our counseling comes into play. You know, we focus on, you know, what people are bringing into the household, their net income, not their gross income. We develop budgets to determine what they need to live on, and hopefully there's something left, and how to channel that money to start addressing the debt in the fastest way possible. So
now, a lot of counselors, you would say, well, can I trust them? This is getting advice. So most people are cynical, or should be. There are companies out there who will promise you that they will get you out of debt and save 70% of what you owe.
Yes, those are settlement companies. There are companies out there that do offer that type of service. We don't offer that type of service. We're paying the creditors back in full. The only thing that I recommend to people is to do your homework. I mean, contact the Better Business Bureau. We have a report card on file with them, which happens to be very good. If you don't, you would shop around like you would anything else to make sure that you're using a company that is legitimate.
Right. And hopefully it's better than the worst.
Yes. So, but if you do your
probably
research, then you'll find out.
Okay.
So that's what we recommend to people. And we get questions all the time, what makes you different from some of these other people? And it's like, well, we are licensed by the New York State Banking Department. We're very regulated, and feel free to do the research on us.
And you're nonprofit?
We're nonprofit. We have a website that has all our background information. Company's been around for 37 years. So.
Now, if a company says, we can help you, you need to give us some money up front. Is that
I
like
would
a
be
red
very
flag?
scared.
Right.
Yeah, I would run from that.
Uh-huh.
We don't take any money up front. I mean, basically what happens is if we put somebody on one of our debt plans, we just act as a mediator. They pay us, we pay the creditor. We do have a sliding scale fee to use that, which averages between $10 and $30, but we're not even allowed to hold money, so it has to be dispersed within, I believe, a 3-day time frame of us even receiving it. So there is nothing up front, so that would be a red flag.
Of course, it's better to call you if somebody really has a serious problem at this point, and get advice. But do you have any kind of general way that you work through with people that you'd want to share?
Well, basically, the way the counseling sessions go are typically the same for everyone. We offer in-person appointments. You can do one on the telephone. You can even do one on the internet. The way the information is retrieved, it's all the same. We take a look at the income. What are they bringing in? What do they need to live on? What is the debt situation? What is the best possible solution? Now, we're not there to sign everybody up on a debt management program. If it's not appropriate and it doesn't make sense, we're not going to do it. Okay, we might make some other recommendations.
More budgeting and rearranging their
Yeah, suggesting budget revisions, that type of thing, to improve the cash flow, to be able to apply more towards the debt, to address it faster. People that come to us, often their credit rating has already been affected if they've fallen behind. Some people do come to us that are not behind and their credit rating is very good. And for those people, we'll tend to try to steer them away from our debt plan and maybe come up with some other solutions for them.
Okay. We can get back to some of these how do we get out of this kind of situation questions. I thought it would be good to just go over also some of the aspects of credit cards.
Okay.
Like there's the APR.
Yeah.
Maybe that's really basic, but
well, the
wouldn't hurt to
percentage
talk
rate.
about it.
Yeah, the percentage rate, again, if you shop around, can be very reasonable on a revolving credit card, and then again, it can be very, very high. What people need to watch out for is, the introductory rates. They're good to have. However, they typically end at some point, and people don't pay attention to that part, and then all of a sudden it skyrockets. And also, not reading the fine print in terms of being 5 minutes late with your payment can, double and triple your interest rate. So
and that could have meant in the past 5 after 5.
Yes, exactly. So they're trying to, I'll say, improve on that window of time. They used to have like a cutoff time, and it was like relatively early in the morning. And with the new legislation, that's improved as well.
Well, let's talk about that a little bit since we're bringing it up here. We have a financial crisis, and that seems to have spurred some legislation to regulate credit card companies because they are being asked to bear some of the blame for the amount of, which seems like an ungodly amount of debt on average that we have on our credit cards in the country. So what has changed, and what?
Well, part of what's changed is that the new legislation is being very protective of our young consumers. A borrower that is under the age of 21 has to be able to prove that they have the ability to pay, or they're going to need a parent's signature. They're not allowing them to prey on the younger kids as well, as in terms of they're trying to get them out of the college campuses and stuff like that. So that kind of thing. The other things that are going on is they're trying to eliminate fees for things like if you want to pay by the telephone or via the internet, there's a $10 fee. They're trying to eliminate all those types of things.
Things that actually make it easier and cheaper for the credit card companies.
But they're charging fees. They're also trying to extend the term for those introductory rates and explaining that they have to be at least 6 months to a year. And also the disclosure information in terms of any changes in your plan, rate increases, that type of thing. They now have to give you at least a 45-day notice of that change. So a lot of different things that are going to help the situation.
When somebody uses a credit card to get cash, I've seen in brochures most probably charge about 3%.
Yeah,
right there, right on that money.
Yeah, there's a much higher rate typically for a cash advance as opposed to a regular purchase.
And so that would work out at a pretty high annual rate if you were actually doing that habitually.
Yeah, it does.
To think, and then if you turn your money over faster, 3% becomes just a huge amount. So it's really something to stay away from, I would think.
Oh, I would think so. You don't want to really. I mean, if you need to borrow, you'd be better off going to your bank and taking out a fixed rate loan as opposed to a cash advance on a revolving credit card. It will end up costing you a lot more money in the long run.
And perhaps that is part of the problem with the credit cards now, because if a home has lost value and now the loan becomes too much of a percentage of the value, so the bank's saying, well, you don't even have the equity here of the loan we gave you anymore.
Right, that's
and
happening
now,
too.
How do we borrow money on the home or whatever we have?
Well, typically at that point you're not able to. We typically don't encourage people to consolidate unsecured credit card debt with their home's value by home equities and that type of thing. We don't encourage that at all. It's very risky.
So I would think it would behoove people, rather than to take that kind of scary step, maybe late at night, and decide to pay something with their credit card, to make a call to your office the next day and say, what should I do here?
Absolutely. I mean, we're open to any questions. I mean, you don't need to even have a formal appointment. Anybody can call the agency and just say, I was thinking about this. Can you give me your opinion, or what have you? So.
You mentioned a couple other things. One was the time that people have to pay. And of course, then that leads into the penalties.
Yes, which can be very, very harsh. I mean, a late fee of these days is averaging $39. So I was looking at a client statement yesterday, and they had a late fee of $39 and an over-the-limit fee of $39.
$78 added to the bill.
Exactly.
And that could be even if you have a small bill.
Sure. Oh, yeah. It doesn't matter. You could have a balance that's under $100, and if you're late, they're going to hit you with those same fees. So.
Do you counsel people to have the cards paid automatically, perhaps through a bank account?
That would differ from person to person. If we have somebody that is less than responsible in terms of keeping track of their accounts.
Right.
We're not going to encourage they set up anything that's an automatic payment, because they typically will just get themselves into more trouble with bounced fees from their bank if the money is not there. However, there's other people, they have direct deposit with their paycheck. They know exactly what's what in their budget, and for them, it's a convenient thing.
So you actually surprised me there, because I was expecting the opposite answer.
Oh.
But it makes sense. I was thinking, if somebody's a little disorganized, the bills come in, they throw them on the counter, it gets buried with a letter and maybe the newspaper and something else they mean to do.
This is
and
true.
then they think, oh my God, I wonder if the bill's due, and they go and yes, it was due yesterday. So, in that case, it would be better to have it have been paid automatically. But if the disorganization is so widespread,
It's just a disaster.
it gets worse.
Yeah, it can make it worse because people don't remember that, all of a sudden this payment was automatically taken out, but they forgot, and then they went to go buy something, and there was a cross, and then thus, there's a problem with the checking account. So that would differ depending on the person and how organized they were. It's a great convenient, I do pay some things in that way, so for me it works out fine. For others, not so much.
I always felt that I don't do it because I feel like I want to make sure that I've looked at everything on that credit card before I pay it, so that I
Right.
could dispute something before I've even paid for it. But does that make sense?
It makes complete sense. The problem is a lot of people don't read their statements, and the likelihood that they're going to be able to resolve a disputed item 6 months after the fact is very unlikely. So that's part of what we go over in this session. People do tend to get their mail and stick it on the microwave and not pay attention. And then it creates a lot of duplication, and people just tend to get more overwhelmed. So we encourage people, open the mail, read the statement.
Okay.
Something isn't right, address it immediately, and odds are you'll be able to take care of it. But if you take note of it and it's much later down the line, you're going to have a problem.
So it's really important, if there's credit card debt, to be really on top of paying those things
Sure.
timely, because you can double or triple
Yeah,
your bill.
with the fees and the penalties, and credit card companies make mistakes too. So it's important to read them and look at them and make sure that there's nothing on there that doesn't belong.
There's usually a half a dozen things on any of these policy forms where they say 3% here and 3% there. Are there any other things that people need to watch out for in terms of these add-on fees?
Well, not that I know of, other than the ones that you just mentioned.
So mainly,
So,
don't be late, and
well, yeah. The
don't
late fees,
take
you don't want to
cash
go
out.
over your limit. Pay attention to your balance, because the over-the-limit fees are very high as well. So,
There was one thing that I actually knew quite a bit about when we were talking, because I travel a lot, and it probably isn't the thing that everybody is concerned about, but it's the thing that I look first at on all my credit cards is transaction fees in foreign currencies, because we travel.
right.
And so I found that Capital One is still the only credit card issuer that doesn't charge any fee for foreign transactions, even though the Visa company itself and the MasterCard company that works with these banks to issue the card charges 1%, but Capital One absorbs that.
Oh, that's something that I really didn't know.
And
I'm not really familiar with that.
My savings bank, not a savings bank, credit union, simply passes along the 1%, which at least it's not 3 times as much.
Right, exactly.
So there are some reasons, I guess, that people get one card over another.
Yeah, sometimes there's special discounts, rebate offers. It's not a bad thing to use them. It's just to be using them in moderation.
And watch the long-term interest rate. Don't go for we'll give you a 3% for 6 months and then it goes to 29, as opposed to
Right.
we'll give you, what's the lowest you've seen on a credit card?
I would say of late about 6% is what I've seen.
Wow. That's not that terrible.
No, it's not that terrible, but the problem is, that 6% can jump up relatively quickly if you're not paying attention to the terms of your contract.
Right.
So,
I just read yesterday Ford Motor Company is paying 8% on their borrowing, whereas GM, because they got government money, is only paying 2%. So, I want to liken that to the credit card. 6%, that's better than Ford's doing.
Yeah, you can find them out there still.
So really, that would be for somebody who is likely to carry a balance. That should really be the primary thing that they're looking at, wouldn't it be?
Absolutely, yeah.
Yeah, and don't be put aside by the gimmicks.
Exactly.
What do you tell people? You know, you go into a store and you buy something. You go to Best Buy, you go to Macy's, you go to any store you want to name, it seems like. You walk up to the cash register, and if you don't have their store card, they're going to hit you, oh, we'll give you 10% off if you get our card.
Exactly. Well, I mean, the store cards, they have advantages and disadvantages. I mean, an advantage is oftentimes you get coupons and you'll get special discounts, and you're privy to certain sale items and stuff like that if you use their store card. However, typically, what you save on that end, the rate is usually much higher on the store card when you can use your basic MasterCard, Visa, Discover card in that same store, perhaps at a lesser rate. So you got to kind of weigh it out. You know, is it a store that you shop at frequently, or are you going to open up another card just for the 10% off and then pay for it in the long run with a higher rate?
And now they also say, this was a line I got recently. Mm-hmm. We didn't do it, but oh, just take the card, you can cancel it afterwards.
Sure, yeah. Yeah.
What does that do to your credit rating?
Well, closing your accounts usually typically will affect your credit score. It will lower your credit score. So we don't encourage people to do that.
So you shouldn't take a card probably not very often.
Not
maybe
for an isolated deal like
unless
that.
Unless it's really big and you think it's
yeah, maybe
worth
a bigger ticket item where you're really saving a lot. There might be some benefit to that, but typically for the 15% off that day in the store to open up a card, it's not usually worth it.
Okay. So there's a lot of advice, excuse me, that you've already given, and let's go into numbers of cards, because that kind of comes up with the idea of we're being pushed with cards. And I notice it's not as frequent now as it was a year or two ago, but still, people will have a wallet full of cards.
Yeah, they do. We typically, general rule of thumb is no more than 3. Once you start to exceed 3, that's where people lose track. They forget to pay. It really isn't necessary. I mean, if you have a reasonable limit on your cards, you don't need to have a dozen cards. So
that would get difficult.
Yeah, and some of our clients do have an excess of 12 credit cards. 12, 15, 16, some people.
That sounds...
I don't know how they keep track.
Juggling. Yeah, I can't juggle.
Yeah. And they land there because they're falling prey to those people that are saying, oh, here, take our card, we'll give you a 10% off.
Right. And, let's transfer your balance from the other one. And that just buys you a little time but makes it worse later.
Yeah. It's a vicious cycle. It will catch up to you. So we don't encourage a lot of flopping of cards.
Now, in terms of the amount that they allow you to borrow on a card, it seems to vary a lot by company.
It does. Some lenders out there have unsecured credit cards with balances of $30,000 to $40,000 on them. No security required. Others are more conservative. I don't really know that there's any rhyme or reason to that.
I don't know, all the inside things with credit ratings, but does it give you better credit if your credit cards have higher limits?
Well, not necessarily. I mean, I think what they're looking at in terms of what goes into that credit score is not so much the limit, but how much of the limit you are accustomed to using, what you're doing habitually. Are you exceeding 50% of what's available to you typically or not? So it's kind of like a ratio. It's
that's more sensible.
That they're looking at, as opposed to, oh wow, this person has a really high limit.
Potential amount, and so they must be really good.
Right, exactly. But they have this potential, but yet they never abuse it. So. And they read into that by how much they carry on average on the balances. If you have a $10,000 limit on a card and your balance is typically under $1,000, that's going to be better than a $10,000 limit where your balance is $9,590.
Okay, right.
Where you're constantly exceeding.
So you're almost, yeah.
Yeah.
Okay.
So that's kind of what they're looking at.
I see. There are a lot of cards, and I guess I don't know where we go with this, but I just wanted to bring it up. There are so many cards being pushed at us that I don't know if they're called affinity cards, but the university that you went to, maybe even your high school if we get crazy, the Yankees, your favorite baseball team, you can get a card with anything on it.
Yeah, you can. And typically, the only real benefit to those is perhaps some of the discount offers, special points programs. Those are what make those attractive.
Point programs, right. Are people following the rules on those? It used to be, it seemed like with the airlines, they would attract you and say, okay, you get points, and you would dutifully put the numbers in when you bought a ticket, but then they would take the points away because you didn't use them soon enough, and I never got enough points with one airline to ever use anything.
Yeah, I'm not really, I was never one to take advantage of any of that type of a benefit with the point program, but I know there's a lot of people out there that take it very seriously, and for some people it's really beneficial, the money that they save if they keep track.
Yeah, I've seen new ones where you can actually put money into your retirement account.
Oh,
by
okay.
An investment company. I probably shouldn't give names, but
Yeah.
they're advertising an affinity card where 2% of your purchases can go into your investment, your IRA.
That's interesting. I'll have to look into
That's
that.
not too bad.
I wasn't familiar with that.
But I didn't look at the interest rates on the card.
Yeah, well, I'm sure there's something there that will void out that 2% that goes into the retirement.
Now, what about identity theft? We didn't talk much about that, but credit cards, isn't that one of the things that thieves really like to steal?
Oh, yeah, definitely. Typically, well, now there's a lot more safety guards protecting people from that. A lot of times credit card companies, if they see excessive activity that is not typical for that particular consumer, they'll make a phone call. Of late, I had to travel a little bit, so I was using mine for a gas purchase, a hotel purchase, something that normally I don't do, and especially not in the area that I live in. And the credit card company called me, and they said, we want to make sure and verify that this is you. So there are more safety features out there for people so that their identity doesn't get stolen, but it's the consumer's responsibility too to be very careful with things like receipts and shredding statements and perhaps not carrying your cards unless it's necessary in case you lose them,
right.
That type of thing.
And don't write PIN numbers and things on a piece of paper.
Right, yeah, you want to keep those in a safe place so that people don't have access to
It's
them.
better if you just say, I can't remember, and you don't buy something than that
Right.
you carry it and lose your wallet, and then it's like,
Right.
wow, look what I found.
So,
I don't know anything about this area, but credit cards are always trying to get us to buy insurance on things.
yes, they are.
And to me, it seems like I thought I wasn't responsible for over $50, so why would I buy insurance?
Well, I mean, the insurance piece is like any type of insurance typically. I mean, you're buying it to limit your risk. I would say the need for that would vary from person to person in terms of how stable is your job, because part of that insurance could cover an unemployment situation. Part of that insurance piece could cover a disability situation if you were on disability. So it can be a benefit, but like anything, what is the risk involved for you personally? What is the likelihood that you're going to have one of those situations? Obviously, we can't predict the future, but how much are you willing to pay for that risk? Just like life insurance or any
So it
other
sounds like if you have
insurance.
insider information and you know that you're a bigger risk and they don't, that might be a case.
Exactly.
Okay. Well, we're about to the end of my questions. Is there something you think I should have asked that I didn't? Where people really are coming in and saying, wow, what do I do?
Well, I mean, I think we pretty much covered everything. I just really highly encourage people to ask for help before it's too late. There's a lot of things out there that these companies are willing to do before they get into a really serious situation. So encouraging people to ask for help, calling our agency before they get into trouble, or if they foresee in the near future they could be a victim of downsizing of their company, potential loss of their jobs. Be proactive.
Now, are you available just to answer a question if somebody
Absolutely.
just doesn't know which road to take?
Sure, anytime. Yep, they can just call our agency. They'll get them connected with a counselor, and they can choose to set up an appointment, or they can just simply ask a question. That's fine.
You say they can call. Is email and phone?
You can do counsel by phone. You can come to the office. You can do it on the internet. It's 1-800-479-6026.
Okay, and if it were going to be internet, we can put this on the screen so they can read it as well.
Yep, that would be our website, credithelpny.org.
Okay.
Is our website.
We'll make sure we get that right.
Okay.
Laurie, I want to thank you very much for being on the show. I think credit cards are something I haven't heard talked about enough.
Yeah, well, I thank you for having me. It's a serious topic right now.
Thank you. And I want to thank you for watching. I hope you enjoyed the show, got something out of it, and will join us again next time. Until, have a great week. Take care.
Welcome to Channel 17, the Town of Colonie Government Channel.